Look at cash flow. Can you see the word cash? So it's all about my cash. And cash at this stage I know, and I didn't say it to you in the previous video, but cash basically consists in my balance sheet of two things. It's my cash and cash equivalents. Ne? What is cash and cash equivalents? It's my cash float, petty cash, savings account, check account. And it's also my bank overdraft. So I'm asking you, how can bank overdraft be cash? Because it's money that's available for me to spend. It's in my bank. Okay, so when they talk about this, yes, if I have a bank overdraft, it was cash that I used. So if I look, okay, let's not go too much into that. We'll get to that. Let me just quickly revise what the cash flow is about. But always remember, when we talk cash and cash equivalents, but also bank overdraft. Okay, I can see question marks. Let me just quickly show you. Let's say this is my line. There, my bank is 0. Okay? Now let's say my bank was plus 10 the start of the year. And the end of the year, it's minus 5. It's now in overdraft. How much outflow of cash was there? I still don't have 5. I spent 5 of my overdraft. So now, how much cash went out of my business? Can you see my net change is going to be minus 15? Because I used that 10 and I used that 5. Okay, let's do another one. Let's say, beginning of the year, I had an overdraft of minus 2. End of the year, I had a current account of plus 20. Do I have a net inflow or outflow of cash? Inflow of cash. Can you see how much came into the bank? 22 Rand. Let's quickly talk. I first had to put 2 Rand in to get to 0. And then I put in another 20 to get to plus 20. You guys get it? So if I look at this one, I spend 10 to get to 0, and then I spend another 5 to get to minus 5. That's why it's minus 15. Can you see what is happening and why bank overdraft is also part of my cash?
So when you say that the bank overdraft is part of your cash, but then in the bank, it was the bank statement, not the balance sheet.
Yeah.
Is that BS for balance sheet or balance sheet?
Where is BS?
At the cash.
Yeah, it's in the balance sheet. This is in the balance sheet.
So then why is it that our bank overdraft goes to
cash? Because it influences the cash that's available to spend. It also influences the cash that I did spend.
No, why is it? Why, if you have a bank overdraft, why do we take it to the bank? Why do we take it to credit current liabilities?
Because it's not cash. We owe the money back to the bank. Yeah. The same goes with loan. Loan is also cash that's available to spend, but it's a liability because I have to pay it back.
But then why are we saying now it's here?
Okay, let me just stop here because we're going off. What cash flow is about the cash moving, right? This isn't about it being a liability or an asset or an expense. This is literally, did I put this in my CRJ and my CPJ? Is this a cash receipt or a cash payment? That's what it's about. So if I say to you, I deposit 10 Rand capital, I'm not going to think, oh, it's owner's equity. I'm going to think, what does that do to my cash? And to my cash, it's an inflow. If I say I pay a creditor, can you see it's a cash outflow? I don't care about the fact that my liability is decreasing. It's not about the liability. The same goes with the bank overdraft. I want to see in the end what happened to my cash. So if I look here, yes, I had positive 5,000 the start of the year, positive 143 the start of the year, meaning I had an inflow of 138. You see? Let's say, let's just for the example's sake, say, let's make this 5 overdraft. Ne? Let's say I had an overdraft of 5. How will it change my net cash that came in? Can you see now it will no longer be 138, it would be 143 because more cash had to come in to cover the negative bank, ne? To end in a positive bank. Not 143, 148, sorry. Is everybody sharp?
Yes.
But don't think too deep about this. Just breathe. What I'm trying to say to you, the cash flow is about, if I look at a bank account, I see I have an opening balance and I have a closing balance. Ne? What was the net inflow or outflow? So in other words, in cash flow, we talk inflow is money coming in, meaning receipts. Outflow is money going out, meaning payments. You see? So I want to see what is the net that happened. And in this case, I can see, remember now, it's without the brackets and without that, the net inflow was 138 Rand. It's not just about what I receive, it's also about, it's about everything coming into my bank and going out of my bank. What is the net effect? When I look at this, I say I had an opening of 5 plus receipts, less payments, so I still have in my bank available 143,000. You see that? With the cash flow, I am saying, oh, I had 5,000. Now I had 143,000. How much changed from this to this? 138. You see? Can you see it's different things I see? This tells me how much is currently available. This tells me how much cash changed from the beginning of the year till the end of the year. What happens now? What happens now is if I look in the statement, I want you to see that there's 3 activities. Ne? And if I add and minus those 3 activities, I will also get the change of 138. You see? So in other words, I can work it downwards or I can work it upwards. Both will give me the same amount. Is everybody sharp? The second thing that's really important is brackets. In a cash flow, they mark the amount with the bracket. So if it must have a bracket and it doesn't, you don't get your marks. You guys, very important. So I've got a little story to tell. Okay? I am going to record it and I hope you hear it, but okay, so here we go. When you go out of the house, you're going out, you're going to visit your friend. What does your mom say to you? No, not where you're going. No. Your mom cares about you. She's going to say, take a jersey or take a jacket because it's cold outside. So, when you go out, you put on your jersey. When you come in, what's the first thing you take off? You take off your jersey. Now I want you to have that image. Let's say this classroom. is where all my cash lives. Right? So this is where my cash lives. So when cash goes out, what's he going to do? He's going to put on his jersey. Bracket. When cash comes in, he's going to take off his jersey. No bracket. Okay. So, now let's remember this. If I ask you here, where they say here, work with me, interest paid, do you think it's with or without a bracket? With, because it's going out. Dividends paid, with or without? Tax paid, with or without? You see? So the first thing you do is whenever you see the words paid, you go put your brackets. Okay? Let's quickly look. Buy fixed assets, sell fixed assets. Which one will have a bracket? Buy. The buy. Okay? If I say buy back shares, issue shares, which one will have the bracket?
Buy back shares.
The buy back shares. Okay. So those one, if I say increase loan, decrease loan, can you see I already put the brackets in for you? Let me explain to you. If I increase my loan, money is coming in. But if I decrease my loan, it means I pay off my loan, meaning money is going out. You see? Okay. So now let's quickly go look at the different headings. I want you to see, you don't have to write cash flow from every time. You can just write. What? Deposit, let me explain fixed deposit. So fixed deposit is on one line. So we can't put a bracket before the time. But what is a fixed deposit? Let's quickly draw a little picture. If I have a check account, oh, it's now suddenly very dark. No. Let me just make it a bit lighter. So now too light. No, it's fine. Okay. So, if I have a check account, remember this is my bank. When I talk bank, I talk about my check account. And I have nothing else. But now I want to invest in a fixed deposit. Can you see I'm taking money out of my bank and putting it into a fixed deposit? Remember, our classroom is where our money lives, our bank. So if it goes out to go live in another classroom, is it a money inflow or outflow? Outflow. Can you see it's an outflow out of bank? So if fixed deposit increases, it's an outflow of cash from my bank account. Does that make sense? Because I take it out of my check, put it into a savings account. Okay. Can you see when that fixed deposit matures, it comes back, now it's an inflow of cash in my bank. Does that make sense? Okay. Now let's quickly look. So in other words, when my fixed deposit decreases, it means the money is coming, no bracket. It means the money is coming back to my bank. Okay. So it's all about the inflow and outflow. So for cash flow, you're always going to think, is money coming in or are money going out? Okay. Every time, every single time you say, money coming in, inflow. Money going out, outflow bracket. Yes. Question to you. So if you say to me, at this stage you have a bank overdraft of -10. And now I say I deposit 2 rand that my mom gave me. Is it an inflow or outflow? Inflow. Can you see your bank overdraft is now going to be -8? Okay? It's not a bank overdraft. The bank overdraft changes just like the current account changes.
So now I'm seeing I'm going to end this into a cash flow.
So what we usually do, you're running ahead. But the next thing we're going to do in one of these exercises is, let me show you. The information they usually give you like this. They give you last year and this year. Okay? Now, let me quickly show you how a cash would look like. So you know you've got your change in cash, you have your opening cash, and you have your closing cash. Is that right? So now if I look here, I see there's a bank overdraft of 915,100. It's the opening, 915,100. It's the opening, so I put it in brackets. Okay? Now, can you see for the closing, there's no bank overdraft. Now, if I go to cash and cash equivalents, how is it possible to have cash equivalents if there's a bank overdraft? Oh, yes, of course. There's petty cash and there's cash float also. And I might have a savings account. There might be a fixed deposit that matures. So they can be both a cash equivalent and a bank overdraft at the same time. It's possible. So now, if I look, I at the start of the year, 3,000 Rand cash. So that means what is my opening balance? It's going to be 912,100 negative. Okay? And my closing is just going to be straight 1155,000. Okay? Everybody fine with that? Can you see? There's your cash. There's my cash, and there's no bank overdraft there. Okay? Are we fine with this? So now I ask you, what is my change in cash? So, can you see that it's going to be quite a big amount, because my opening was negative with almost 1 million, and I'm ending with a positive 1 million. So can you see the change is going to be close to, if not more, than 2 million positive inflow. Ne? Because we literally went from minus 912 to plus 1155. So we went from there to there, so there's obviously going to be an inflow. Okay, so how will I do it? I will say 115 plus 912, and that gives me
912.
the 912 I got by saying the overdraft is 915, and my cash equivalence was positive 3,000.
So it was negative with a month. Okay.
The 3,000 is positive because it's a cash equivalent. Okay, you must going to look at both. You're going to look at the cash equivalents, and you're going to look at the bank overdraft. Is everybody with me?
So do we add the 3,000?
Yeah. So this is also minus, plus the 3 gives me 912. This is a 0 plus the 1, and it gives me 1.
Oh, so it's a
2070. 70. Okay. So is everybody sharp? Yes. You're taking me off topic, you know that. But it's fine, I love you. Yes. Talk.
And so the change in cash flow, where are you gonna record it?
Nowhere. I record it in my cash flow. So if you give me time to explain to you the cash flow, if I look here at the cash flow, this is the only place I will see that change in cash. And that's the reason why I do the cash flow statement. It's because I want to see the change in cash. Was there a net inflow or net outflow? Because cash is the most important thing in a business. A business needs a healthy cash flow. So what are we doing? We are doing companies. So when people want to invest in our company, how do they invest? They buy shares. So now if people want to invest in my company, they're going to do research. And one of the things, that's why when we publish statements of a company, we're not just going to publish the income statement and the balance sheet. We're also going to publish the cash flow statement, because people want to see if we have a healthy cash flow. And that is why each of these sections will give information to them. So now if I look, the first, I'm going to work from the bottom to the top because it makes most sense to me. So they're going to look at your financing. So now what is financing in a business? Financing is about getting money to run the business. And how do you get financing? You get it through own capital and borrowed capital. So financing will always be your shares and your loan. It's all about that. Because that's how you get money to run your company. So can you see, we can buy shares, meaning there's an outflow of cash. We can issue shares, meaning there's an inflow of cash. We can make a loan, meaning there's an inflow of cash. We can pay back a loan, meaning there's an outflow of cash. Does that make sense? So in other words, in here I can see the net effect of my financing activities. You see? Did it bring cash into the business or did it take cash out of the business? You see? Next one is my investing activities. Now investing, what is your investment? Your investment is your fixed assets. Your land and buildings, vehicles, equipment, that's an investment. And your fixed deposit, that's your investment. So now I want to, you can't see nothing. Now you want to know, did those activities bring cash or take cash? So if I buy fixed assets, the cash is going out. If I sell fixed assets, the cash is coming in. What will I show there, the profit or the sales price? Ha ha! The sales price. Because what goes into your bank? The actual sales price, not the profit. Because what are you going to do if you make a loss? Are you going to subtract it? No. It's about the cash coming in. Okay? Now, the same goes with the fixed deposit, which I already explained. Now I'm going to have a net effect. Most of the times I am buying quite a lot of fixed assets, so then it would be an outflow of cash, right? Then I go to my operating activities. So operating activities is my 3 pays. It's the interest I paid, the dividends I paid, and the tax I paid. All of that is an outflow of cash. No. This is the dividends that I paid. It's not what I owe. And can I quickly, while we're on the point, I'm going to explain it nicely to you, but if you think about it, what is the 2 dividends that we pay? We pay the interim, but in the what final do we pay? The ones we owe. So in other words, we pay last year's final and this year's interim. Okay, but we'll get to that. And now they say, okay, cash generated from operations. And what is the statement where all the operations is happening? Yes, it's your income statement is most operating profit. Nee? Okay, but now that thing is going to be a note. This is going to be a note on its own where we're going to get what is my profit, and then we want to see our change in working capital, which I will still explain to you. But can you see now, if I'm an investor and I look at this cash flow statement, I get quite a lot of information from this. In your income statement, I'm going to get information about my profits. What is it that make my profit more or less? Did I spend too much on the telephone? How's the sales? That is what I will see. Because remember, a company will always publish last year and this year, 2 years, so that you can compare. The balance sheet will show me my financial position. In other words, what is my assets? Ne? But how did I get the assets? Oh, I got it through owner's equity and liabilities. Can you see? Owner's equity and liabilities. This is how I finance the assets. right? Then cash flow will show me how healthy is this company's cash business. Because if he has an overdraft of 2 million and it becomes more to 7 million because they bought equipment, Nick, can you see all that information I will get here? Then I'm going to be a little bit suspicious, because are they working responsibly with their cash? You see? And by the way, how much interest are they paying on that overdraft? How much cash is going out because of the interest that they're paying on that overdraft or on the loans or on that? You see? So I want to see how healthy and how responsible this company is working with their cash.
So you can have an overdraft and a balance
Hmm.
at the same time.
Hmm.
So it's not like a must to pay your overdraft.
No. You don't have to pay off your overdraft. Most companies have got an overdraft, but you have to keep it in line. You mustn't go out of boundary. Because why? It costs money to have an overdraft. And that is why if you look at an income statement, they put the financing right at the bottom where they say operating profit plus interest, less interest. Because they want to show what effect does the interest that I pay every year have on my profit. Here I will see interest paid. How much is the effect, that interest that I pay every year on my overdraft and my loans? How much is that costing me in cash? And you can now see if it takes a big amount here, then it's going to be very off-putting to a lot of investors. Especially if it's way more than last year. If they keep it constant and they are still able to show a big profit and positive cash in the end, yeah. But the moment it starts growing, you might make investors a little bit suspicious. Yes, Bonomo. Ask her. Okay, then you remember what you want to ask. Okay. She was just stretching her arm, so you can ask.
So does the cash flow
It would be in, so yes, the cash flow and liquidity go together, right? Why? You're not going to use any of this information in any of our ratios, if that's your question. No. But if an investor or potential investor wants to look at if our cash flow is healthy, they will look at the cash flow statement and the liquidity ratios. And you will see in the company law, they have certain things there, and they say certain things you're not allowed to do. For instance, you're not allowed to declare dividends or to buy back shares if your cash flow is not healthy. So they, one year, I don't remember in what kind of paper, they actually asked one of the analyses where they gave liquidity ratios, and they say this investor wanted us to buy back shares from them. Would you advise it? And then you would have to go look at the liquidity and see, oh no, this guy's got a really bad liquidity situation, so no, they must not buy back the shares. We would not advise it. So yes, they definitely go together.